Hello traders, the title of the video is Eyes Wide Open, Elliott trader, zero in on Sensex India. Alright, traders have been following us before, know that I always use the TC2000 trading platform, but recently I'm start using the TradingView trading software. Because a lot of traders were asking me, okay, to take a look at the TradingView trading software. I would like to take this opportunity to thank traders that have been giving me tips and tricks to use that trading platform, PMC Sash, other traders out there that were telling me, Joe, you have to do this, you have to do that. But I want to tell traders that my subscription is starting with 30 days trial plus immediate subscription. So I subscribe straight away. They give me 30-day trial, and I have my subscription will start the following month. I do not know whether they limit my data right now during the first 30 days because traders say that I can see data up to 90, 75 and so on. As I type in Sensex, that's all I can get now. So probably they have limited my data now, but I'm working on it, and I also welcome the tips and tricks for traders. I'll try them. To see whether traders say to me, I will see a data from FMCM. So I'm working on those. Probably they limit my data for the first 30 days, and after that, probably I'll have more data. But with what I got today, and also because I'm still learning this trading platform, all right, let's start with this. As always, whether you see data up to 90, 70 or so, you want to always bear in mind that you always want to take that precaution and say, if the data is not complete, you may think that the data is complete, but always think and say, if the data is not complete, the information that we have, we can only work with that, and the result of our area wave analysis will become speculative. All right, that's what I'm going to say to you at the beginning of this. So some traders may have more data than me, probably because of my 30-day trial that is starting straight away, plus my subscription. We will see whether I'll get more data, all right? But I welcome everything. All right, if you have a YouTube channel, you can also, all right, post a video about TradingView and send me the link, and I can watch that video when you show me, all right, or ask them a question. I mean, during the trial, probably they limit my data, all right? So let's get started. IY open, Elliott wave trader, zero in on Sensex India. This is the first time I am analyzing Sensex. I have a question, all right? Is Sensex Index ahead of the market? All right? So we say that the S&P 500 is the market. That's the reference point. That's what we need to pay attention to. According to my wave count relating to the S&P 500, we are now in the fourth Elliott wave of a higher degree. Anytime we are talking about Elliott wave count, we must always go into the mind of other traders. So you may see in one way, another trader may see another way. At the end of the day, we want to make sure we are buying when the price is about to go up, and we are selling it when it's about to go down. All right? Is he ahead of the market? Okay, so you will understand very shortly as I start analyzing the chart why I'm saying that. All right? So looking at this chart, okay, a lot of traders will say this is an impulse wave. They'll say first wave if I have enough data. And they will say probably this is a second wave. Feel free to disagree with my preliminary wave count. All right. So another trader may say, George, the Sensex Index is not ahead of the market. This is now the third wave for the Sensex. Do you agree that we are also expecting a fourth wave for Sensex like the S&P 500? Probably. Because if you use the reference point 2009, the S&P 500 was trending like other major indices, and the Sensex was also in a rising channel going down from 2009. The financial crisis of 2008 is clearly here, forming the second wave. All right. So are you happy with this wave count? All right. So this is my preliminary wave count. Let's try to go into the mind of other traders. All right. So other traders may say, George, you have said according to your Elliott wave count guidelines that very often at the start of an impulse wave, we may see, all right, an inverted head and shoulder or a consolidation, either a triangle, a consolidation in horizontal channel, and then a breakout will form, okay, the impulse wave. All right, so another time I say, George, all right, this is the first wave. I disagree that this is the second wave. We have an inverted head and shoulder pattern here, all right, and this is the end of the second wave that is forming, all right, a kind of, all right, messy flat correction that went a little bit too deep right here. So they may say probably, all right, those traders, you need to do that because you don't want to do your own thing, all right? You want to understand what's going to be. Another trader may say there was a bit of exaggeration from Sensex. Normally, it should be anotherly a flat correction here, something like this, all right, or something even like this. You get a message, and then they'll say 1, 2, 3, 1, 2, 3, and then 1, 2, 3, 4, 5 down. All right. So they may say, George, we see an inverted head and shoulder chart pattern. Okay, right there. So they may say, okay, George, this is my second wave. That trader may say, this is my second wave. And for that trader, he or she may say, George, this is my third wave. And this is my fourth wave. And this is my fifth wave right there. So, George, the question that you were asking, that is the Sensex ahead of the S&P 500, that trader may say yes. First wave, second wave, third wave, fourth wave, and the fifth wave. There is not too much disagreement because in the first scenario, I was telling you that we have a second wave here, and we have a trending first forming the third wave. So right now, both traders will be expecting a correction. The first trader will be expecting a fourth wave like the S&P 500, and the second trader will be expecting a proper correction, correcting this trending first. Do you agree with the first trader or the second trader? You can see that there's no big difference. Both will be making the same decision almost. All right. But personally, I would like to go with my first wave count. Are you with me or are you against me? Let me know in the comment section. It's not about against. It's your wave count a little bit different than mine. So this is not an intrinsic disagreement. It's just, we can say, Elliott wave count disagreement, but not a violation of Elliott wave principle or a misuse of the Elliott wave theory. All right. So another thing. So the first trader may say, George, I'm right because the third wave is subdivided into 5 manner wave. First manner wave, second manner wave, third manner wave, fourth manner wave. This is the fifth manner wave of the third wave. Yes, George. Yes, the Sensex is aligning with the S&P 500, and we are expecting the fourth wave. And after that, instead of expecting a proper correction, it's just a fourth wave, then we will have the fifth wave when the S&P 500 is also forming the fifth wave. Unless Unless our forecast for S&P 500 is also wrong, because you remember when we were analyzing the S&P 500, we were also going to the mind of Elliott trader. Now, some trader out there may say, George, you are not very sure about what you are doing, but no. The reason why I'm doing this, because I have some experience in this area. There was a time when I counted Elliott wave for the dollar yen, and the traders that were a little bit wrong, okay, were a little bit wrong. So there were divergence between my wave count and their wave count. They won the day, but their wave count, theoretically speaking, was wrong. This is what we are facing when we are counting wave. There are trading software counting wave. There are human being counting wave. There are market participants that are counting wave that have more firing power than us or than ordinary traders. So those people can move the market or change the structure of the price. And one may say, I won. But saying that you won, it means that you have made, okay, the right decision, buying when it's going up and selling when it's going down. That's the most important thing. All right? So look at it. So the reference for 2009 is very important. All right? Stock market was trading, this was trading, subdivided in 5 ways. I'm a bit reluctant, even though I'm calling this trade, in my mind somewhere, I have a little bit of agreement with the second trader that say, yes, there's an inverted head and shoulder chart pattern here. Why am I having that kind of thought? That's a very good question, because there is a pattern here that I want traders that are trading Sensex to pay attention to. Looking at this chart, because I have trained my eyes to spot the fractal pattern, you can see here, price went up, okay, here, do you see that? It formed an inverted head and shoulder chart pattern. And then there was an impulse wave. Look, after the impulse wave, do you see another inverted head and shoulder chart pattern? Yes, there is one. You may say, Joe, what is it? See, it pulled back here. You see, this is the left-hand side shoulder, rally up a bit, pull back again, form a head, and this is again the right-hand side shoulder. So after the first impulse wave, we see an inverted head and shoulder chart pattern. Now we have another impulse wave. You see an inverted head and shoulder chart pattern. It looks to me, my friend in India love very much the inverted head and shoulder chart pattern, or they are using our wave count guidelines. They say, George said that very often before an impulse wave, there is a correlation, all right? So this to make you laugh a bit. So the question I'm asking, all right? So another trader may say, George, or the second trader may say, this is the second wave, all right? Okay, and this is the third wave. And if that trader managed to spot the inverted head and shoulder chart pattern, he will be saying that, okay, in fact, George, the fourth wave has ended here, like the second wave. It's an inverted head and shoulder chart pattern, a very funny flat correction, forming an inverted head and shoulder pattern. And now we are now in a fifth wave. And that trader will be expecting a correction. And the first trader, like myself, who puts the third wave right there, will be saying, no, yes, a correction, but the fourth wave correction, not the bigger correction that is correcting the multi-wave. That the first trader may be arguing with the second trader and say, the multi-wave is not a finish yet. Where have you learned about Elliott wave? So those kind of discussion going on all the time. And I find it very interesting. Sometimes I see some comment or I watch some video on YouTube when the gentleman or the lady that is posting the video may be telling traders that this is what is going to happen. I'm very shocked. I say, how do you know? How do you know that this is exactly what's going to happen? So my approach is always cautious. People say, Joe, you are scared. You have to be courageous. Yes, in trading, sometimes we are courageous, which means we are trading, we are taking what we call speculative trading. And sometimes it works beautifully, sometimes it doesn't work at all. But for talking about, we can do that with day trading or scalping, all right? If you want to take position, you don't want to be speculative. Otherwise, you may have to close down if you are a hedge fund that is making a speculative decision for the long-term trade. So you want to look at it. Do you want to take a speculative trade for a long-term position only to be forced to close it? Are you reading the news? There was some big company, I don't want to name them, that lost billions of dollars just because somebody was very sure or took a speculative trade. So all in all, the same story, the same strategy, all right? You count your way, put it aside, okay? Go into the mind of other traders. Do not discount it. Don't count wave and say, this is it. Other traders may see differently. All right? Maybe see differently. In fact, sometimes you may count wave and then you look back again and say, well, how come did I miss that? You see? So put it aside. See all the scenario and have them. You don't have to print them all, all right? Just remember that there are other traders. And after that, want to know what are the difference. Is it intrinsic difference? Is it big difference? Is it big disagreement? If it's not, like here, it's not big disagreement. We are all saying the same thing, maybe in a different language, all right? It's a different language. They are saying second way, the third way. They want to sell here, we want to sell too. So what's the problem? No big difference. We're just speaking, okay, saying the same thing, like in a different, languages, all right? So all in all, what should we do now? So this is what we call the Elliott wave analysis. The expectation is a pullback, either in the form of a fourth wave or in the shape of, a proper correction for the second trader that is agreeing with the first trader. All right? So now, talking about buying and selling, or you are using more efficiently the forecast. Once you have done your forecast, how do you get paid? We talked about it in a video that I posted recently, what to do, after you have done your Elliott wave account. You remember that? You put option, call option, the trading instrument, the trading tool that you want to use. Before that, all right, this is my area to map the chart. You want to get paid? You want to map that chart. It's critical. So, how do you map it? Okay. Normally, we say to trader, connect the low of the first wave and the low of the second wave. If you are calling this second wave, then you will draw this line because you leave it on your chart like this. So, somebody that is trading Sensex, that is using the same data like myself, unless you have more data than myself, unless they limit my data at this junction, or we'll find out soon. I'm welcoming those comments. I like them, okay? So don't worry too much. Don't say, George, I don't want to upset George, so I don't want to tell him that he can do this. Tell me, please, okay? Now you can draw. So what we say, so you connect the low of the first and the second wave, all right? And then you can also connect, bear with me, please. The low of the second wave, all right, and the low of the fourth wave. So for us, that is for the first trader that is thinking of the fourth wave, he or she cannot draw the second trader because the fourth wave is not yet formed. So connect the low of the first wave, the low of the second wave. Now the second trader. They say may draw it like this. So we say first point, end of the second wave. You see that will be his first trend line. So draw this line, leave it on your chart. Draw this one and connect it to this one. Leave it on your chart. All right. And also one more trend line. Are you with me? You promise that you will never remove that trend line. All right, that's good. You don't have to promise me anything, but just remember that those lines can be useful to you. Even you switch time frame sometime. The good thing about leaving those lines on your chart is that sometimes you are trading and you switch to 30-minute time frame, 5-minute time frame, and you see those lines there, you wonder which line this, and you go to the monthly chart, you know that this is a very important trend line. So leave them there, all right? Leave them there. Am I talking too much today? How long have I been talking to you now? Oh, 90 minutes. Let's go fast. Okay, time go fast, right? Okay, you see now? So those are the lines that I want you to draw on your chart. Map it out, draw them down, okay? Another trend line that we can draw is connect the high. If you are calling this the third way, you connect this point, and that point there, you leave it on your chart, the high for the first and the third, extend them, leave them on your chart. If anyone says anything, say, George said to leave it on the chart. I say, George, who are you? Well, that one. But if you are calling, if you are the first trader, then you can do both. Okay, because you have to go into the mind of other traders. Okay, just leave them there. Right? Those traders. So like now you can extend this one. You see how? You see this one? You see the second trader going to the mind, connecting this point. And while he was calling third wave, you see the price pull back to retest that trend line. That's why we are sitting now. Okay, you see now? And what did I say also? Between two trend line, you can draw also another trend line that is what we call the median line. So the idea is I can draw the median line. You see that? Can you see what's happening now? Well, I'm under time pressure. I've been talking too much. Now the time is coming to the end. And then you call it the median. That's the median line between the two red lines. So the price break went down to that trend line, went back to retest the median line. Do you see that? You see that green line? That's the month of November. Brought it back to retest the median line. Now it pulled back to retest it again. Now they push it back up again. So there is a kind of consolidation between that median line and this low here. And you can do the same thing here again. You can do the same thing here. Draw the median line or this one. And just leave it there. Are you afraid to draw a line? Or you want to keep it clean? Messy chart sometimes can be very useful. Right? So that's the median line between this orange and this one. Roughly. You don't have to be accurate. Just roughly. Look at it and see. You can measure it though, but I don't want to waste time now. I show you to trader use vertical line, draw it like this, and project it down the same vertical line. I'm just doing roughly now. So those are the things we map it out. So you are looking for trading zone where you can make decisions. So we can go on and on mapping our chart. Why do we have to do that? That's a very good question. Because after we have done our area wave forecast, it is time to time the market correctly. And how do we time the market? We time the market using what? A different time frame trading method. So the different time frame trading method consists first to find a valid trading setup. 1, 2, 3. That's the first pitchfork tool. So if it's coming down, you want to watch that pitchfork tool, the edge here. Okay, we can draw multiple pitchfork tools. I can draw another one like this. Is that correct? Yes, I can draw that. So I can choose this point, that point, and bring another one here. All right? Okay? 1, 2, 3. And then you see now the price is sitting on the median line of the upper half of that new pitchfork tool. That's where we are now. So play with the pitchfork tool, put it in a different position to identify the trading zone where excellent trading setup. We see again, we move it again, choosing another 3 point. All right. This point, 1, 2, 3. All right. So play with the pitchfork tool. And once your area wave forecast, so you're expecting the fourth wave is going to happen, those trend line and the pitchfork tool will help you to see now what's happening now. You see the first time it break below to retest this one. People know this is support here. They implement a top-down trading method, and there was a signal to buy. This is about getting paid, and then they buy. They push it. They're looking for the next resistance level, median line. You find a resistance there. Now they implement a top-down trading method again, and then they sell it down. Where is the next support? They bring it back here. It's a support level. You find a support again. They start pushing it up again. This is how you can use your area wave strategy and making sure that you get something out of it. It's pointless to have the knowledge for the area wave, but practically speaking, one way is going round. So this will conclude our discussion today about eyes wide open area wave trader, zero in on Sensex India. From my viewpoint, this is me, myself, you may disagree, which is okay. Sensex is also in the third wave third wave, like the S&P. I don't want to talk about higher degree now. Okay, it's in the third wave on the monthly chart, like the S&P 500, and we are expecting a fourth wave. Looking from the viewpoint of another trader, it looks like it's in the fifth wave. The question is Sensex ahead of the market? I do not think so. I may be wrong. Right. If you find this video truly useful, please feel free to share with your friends on Google+, Twitter, Facebook, and Tumblr. You think that, Joe, you have done a very good job for the first time analyzing Sensex. I really appreciate you when traders share our video. Thank you to all traders that are sharing our video. Share with your friends on Google+, on Twitter, Facebook, and Tumblr. Introduce 2-4 Elliott Wave to all Elliott Wave traders on your blogs, please. All right? Our YouTube channel, subscribe to our YouTube channel. Our YouTube channel is 2-4 Elliott Waves. Subscribe today and be sure to click on the notification bell so anytime we are about to live stream a pre-recorded video, you will be notified and you will be there on time to watch it. Sometimes I post video first on Facebook, sometimes first on YouTube. Our Facebook page is stochastic-MACD. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about wide open Elliott Wave trader, zero in on Sensex. Before you run away, trader did show me how I can check on the yearly chart. I've done it. This is a PMC LLC. Thank you very much. So they say, Joe, you have to do this. I've done it. All right. Other traders show me more tips. I'm welcoming all the tips relating to the, all right. So this is the yearly chart. All right. Relating to the trading view, and slowly but gradually, all right, I'll get there. Thank you for watching, and I will speak to you very soon. Happy trading to you all. Happy New Year to you all, and I will speak to you very soon. Thank you for watching.